Do you really want to invest in real estate? Hey, everybody, welcome to Real Estate Revenue. I'm your host, Paul Airy. Do you really want to invest in real estate right now? If you really want to invest in real estate, there are three things you have to remember, especially now, things that might save you a lot of hassle, a lot of time, and a lot of money. The first thing is intuition and timing are so important in real estate investing. And unfortunately, this is something that really can't be taught by anybody, at least not very easily. It's something you have to learn from experience and from other people. You learn from a mentor and learn from their experiences, but it's not really something you can learn in a course. It's something that you have to get from someone who has actually experienced it. Timing is especially important right now because of all that's going on in real estate. If you jump in too soon or if you wait too late, you could miss out on a lot of money. So, especially right now, if you jump in too early, don't get caught up in the fear of missing out. Don't get caught up in everybody telling you you need to rush out and buy real estate right now. And please don't believe these people that tell you that real estate will never go down in value. It will go down, and you're about to see it go down in the next couple of months, the next few months. It's going to go down quite a bit, and it always goes down. Whenever you have a bubble, it always pops. Everything always comes down, and right now have just come through the biggest real estate bubble in history. So timing and intuition are everything in this business. So please be careful. Number two, this is an obvious one. Interest rates are rising. When interest rates rise, prices need to come down. Now, there's a lag time between when interest rates go up and prices come down. And right now, we're in that lag period, and the prices have not come down yet. We're in a position right now where they're still trying to get the most out of their property that they can get. They missed out on selling during the bubble, and they're not willing to give that up yet. And it's just going to take some time. They're going to realize eventually that if they really want to sell their property, they've got to come down to a reasonable price. So we had two things going on. Interest rates were way too low and the prices got way too high. And those two kind of work together. When rates go down, the prices go up. When rates go up, the prices come down, but they haven't come down yet. So just stick it out a little bit, wait and see. And I promise you, they're going to go down. And if things shape up the way I think they are, they're going to go down a lot. So being patient and waiting for the bargains, use your timing and intuition, it will come, and you'll be a lot happier if you just wait it out and see what happens. The number three thing you have to remember in commercial real estate, property values are based on the net operating income that the property generates. So if you have buildings that are only 20% occupied or 30% occupied, and they're still asking top dollar for those buildings, don't do it. Do not get tempted to buy a property like that. That kind of property is something that you would overpay for, and you don't want to overpay for a property. If you overpay for a property, it throws the math all off. Your break-even point changes, and you're going to be in a negative cash flow situation, especially the building is vacant or near vacant. Now, I have nothing against buying a vacant building, but I'm not going to pay the same price that I would pay if it was fully occupied. There's no way. I'll pay a lot less for it, and I'll go out and find a tenant. It's not impossible to find tenants. There are people out there that want that space, and you just have to find those people, find out who they are, where they are, and what you have to do to get them into your property. But they're out there, and you can do that. So don't be afraid of a vacant property or one with a low occupancy. Just don't overpay for it. If it's got a low occupancy, that's a reason to start negotiating the price down as far as you can get it. Sellers right now are caught behind the curve. What I mean by that is they're in a bad situation, a lot of them, because commercial properties typically get financed with a balloon payment. And when those balloon payments come due, the owners have to refinance the property. Well, what's happened between the last time that they financed and this time when they have to refinance is the interest rates are about twice as high. They're almost double. So what's going on is the numbers no longer work for the lenders. The lenders are starting to say, no, we're not going to refinance your balloon payments. We're not going to refinance your property. So now the sellers are stuck. These guys have to sell their property or they have to come up with a lot of cash and pay their note down. If they don't have the cash, they're going to have to sell or they're going to get a foreclosure. Some of the bigger companies can handle a foreclosure. The big time investors that buy properties worth several $100 million, but the little guys, they can't do that. They start getting foreclosures, and then from then on, they're going to have trouble borrowing money on more properties. So they don't want to have the foreclosures and they don't want to have the losses. But in 2023, you're going to find that they have $450 billion worth of commercial real estate loans that have to be refinanced. They're coming up for renewal. And a lot of those are not going to get renewed. And these guys are panicking. And a lot of these buildings have a very high vacancy rate. If they have a high vacancy rate, I guarantee you the bank is going to say, no, we don't want any part of it. You're going to have to pay it off or we're going to take the property. So that's where the bargains are going to come from in commercial real estate. A lot of this is office buildings, office properties. You may have to figure out a new use for that property, but don't be afraid of office properties. Office buildings are still usable. They're still useful to people. And you know what? If you buy a property for a lot less money, if you buy it cheap, get a good deal on it, you can afford to lower the rental rates on the property. The lease rates can come down and then people will move back into them and you'll have the same profit margin that you had when you paid 5 times as much for the property and the lease rates were higher. So it all kind of evens out. So don't be afraid of a half vacant office building. Just buy it cheap, lower the lease rate for the incoming tenants, and entice some people to come in and rent from you. They will come, they'll show up, they'll be there. If they can pay lower prices, they'll come back in most cases. When sellers get in a bind like this is when you start asking for concessions in the deal that you make. You start asking for price reductions for every little thing that you can come up with, maintenance especially. If they haven't been doing the maintenance on these properties, which is highly likely if they have a high vacancy rate, they're not going to be doing maintenance on those properties because that's an expense out of their pocket and they can't afford that and keep up their loan payments. So look for those things. Don't forget to look for deferred maintenance that they have not done because they haven't wanted to spend the money. And be sure you get inspections done on these properties. The inspectors can come out and find things wrong with these properties that you may not see. You may not find those yourself. So this is going to be a good time to look for some seller financing and for bargains on the properties, like buying for what the owner owes on it. If the seller owes $500,000 on $1 million property, offer him $500,000 on that $1 million property. Get it at a bargain, and they may just have to take it. They might not have a choice. They might just be ready to get rid of the property and get it off their books. Especially if they're behind on their loan payments. You can also ask for seller financing if you don't want to put it in cash in the deal. I usually don't recommend 100% financing, but if you can get 100% financing by having the seller finance your down payment for you and then borrow the rest at the bank and fill it up with tenants and get your cash flow going, that's an okay deal as long as you've still paid less than what the property eventually appraises for. You always want to have a little bit of equity room in there. When you add tenants, you're going to add equity to the property. You're going to add value to it. So your equity will go up. So then the bank's debt service coverage ratio, you start fitting into their requirements once you start putting tenants in and collecting more revenue on the building. So those are the 3 things If you're going to buy real estate, you need to remember intuition and timing is number one. Don't forget number two, the obvious thing, interest rates are rising, so prices need to fall, and yet they need to fall before you buy. They haven't fallen yet. So give it a chance, give it a little bit of time, give it a couple of months, maybe 3 or 4 months, prices will start to come down. And number three, remember commercial real estate values are based on the net operating income. If you come across a property that has a high vacancy rate, don't overpay for that property. Don't overpay for any property, but especially those that are vacant or near vacant. Get those at a bargain. Don't overpay for them. So that's it for this time on real estate revenue. And remember, one property can change your life. So go get a property. Just be careful. This is a time right now to be very careful about buying property.